Indian stock market crash. So between October 2024 and February 2025, the Indian stock market experienced a downfall, or we call a landslide downfall, and which is also called as the worst crash in the year. So what happens during that time? So there might be some reason for the same crash that has happened. So there are three important reasons which are being there. First one is small capital stocks were hit the hardest, because in the small capital stocks there is a extreme price volatility is always been seen, and because of these small cap stocks only there is a sudden fall and sudden up of the market happens. Then the second one is foreign institutional investors have sold about 2 lakh crore of the stocks. Okay, this is another second reason for the downfall of the stock market between that time. Then because of this there is a panic that has been spread among the domestic investors, which is further because this is a market sentiment which we call it as, and because of that there is a sudden drop in the stock market. After that, why did the rupee loses value? So whenever stock market goes and up and down, there is also a trend that has been seen that rupee loses or gains the value. Okay, as we all seen that in the previous topic, that FIIs have sold their stocks. That means now FIIs have converted whatever earnings they have got in that stocks into dollars. So now the rupee has to get converted into dollars, so there is an increased demand for the dollar. Okay, so whenever there is a demand of the dollar, so the other currency falls down, because there is a demand for dollar, so the value of dollar increases. So the rupee fell down by 3.5%. Earlier the value of rupee was 83.9, and now it is being around 87.4 per dollar. So this called as rupee fall down because of the stock market crash. So there is a general trend is there, for every rupee one drop in the rupee cause significant stock market losses. That means if there is a 1 rupee drop that is happening in the dollar rupee conversion, there is a around 800 points of market collapse that we can see in that. Now what is the real culprit behind that? So why this all is happening, why rupee is going down, why the stock market is crashing, why the small caps are losing their value and everything? So there are three important reasons. First of all is GDP growth has been very sluggish between various quarters, like it is below 7% because the projected was above 7%, but it has been staying below 7% for 13 quarters, which is a large number. Then corporate earnings are low. Whatever the corporates are earning, their earnings are low, and small capital stocks earning has dropped by 24% year on year. Then the third one is weak earning lead to the lower investor confidence. So whenever investor comes and invest in your country, they have to get good earning on their returns. If you have a very weak earning, so because of that the investor confidence also goes down. Then after that there are investment which are drying up, like government spending has contracted by 12.3% in the financial year 2025. Okay, so government is also spending less right now around from the earlier year. Now that has been contracted by 12.3%. Then private sector investment announcement has been dropped by 22%. Earlier whatever the announcement that has been done by the private sector regarding the investment, that has been dropped by 22%. Then there is a completed project fell by 52%. That means whatever the projects are there earlier, whatever the projects are getting completed earlier, now they said that right around 52% projects are there which are not being under the proper stage of completion. Okay, so which shows that there is some kind of problem that is happening in the economy, right? And along with that, when these stock market crashes, rupees value goes down, and there are other reasons also being given for that. There is a yet another reason which is called income inequality is also worsening the demand. That means the gap between the rich and the poor is widening up. Okay, how we find out that there is a income inequality? So there is a coefficient which is called as Gini coefficient. Okay, which is called as Gini coefficient, which have rose to 0.410 in 2023, which shows that there is a inequality coming. That means the richer are getting richer, the poorer are getting poorer. So there is having the disposable income for the poor end, or we call it as a middle class end, is having very less. So how they are going to spend the money? Okay. Then wealth concentration also reducing the demand for good. If the wealth is getting concentrated at particular end, how they are expecting that the wealth is to be utilized by the other people? Then there is a lower demand affects corporate earning, because of the wealth concentration there is a lower demand. If there is a lower demand, the corporates earning will also get down. Okay, so because of that it will also hit their stock prices. Then there is a certain global connection. There after the Donald Trump came into the power, he has declared a lot of policy measure. Under that policy measure, there is one policy measure which is called tariffs, and there is a uncertainty. Okay, so potential US tariff on Indian exports will be hurting the competitiveness. Okay, so for that there are a lot of talks that are going on. Then higher cost of import could again fuel the inflation. Obviously, if there is a highest cost, people will not able to buy, then there will be much more money needed for the same. So obviously it will lead to inflation. Then domestic industries also will be struggling regarding the cheaper foreign goods. Okay, these are some of the reasons which are global connection, which is again driving our stock market to the downward slide. Then RBI and policy missteps are there. So RBI has delayed the interest rate cut. Whenever RBI cuts the rate, that means it is injecting more money into the market. But RBI has delayed this interest rate cut. So because of that, India market has become less competitive. Okay, then monetary policy alone cannot fix the situation. So there has to be monetary policy which is controlled by RBI. Fiscal policy is controlled by the government. So they have to work in coordination. It is not only monetary policy, you inject the money, you get of the money, and in that way you can boost the economic growth. No, it has to go in together, whether monetary policy or whether fiscal policy. Then optimizing GST rate and fiscal policy is very, very crucial. Okay, now the government has to look onto the GST rates in order to increase the production, increase the boost, because once the GST rates are rationalized, automatically it will give boost to the market. So what we can expect in the coming future? So there has to be a clarity in the policy, and global trade is essential, because if there is a total confusion, total uncertainty remains, so there is further it will weaken the market all over the world. Okay. So what next is that there is a clarity in the policies, and global trade is very, very essential. Like if the countries wanted to make any kind of policies, they have to very, very clear, and they should dictate the clear policy throughout the world if they wanted the global trade to work in a seamless manner. Then there has to be a very, very stronger economic growth has to be sustained, because after the COVID-19 pandemic and financial crisis in 2007-8, the market has not picked up. After that, as soon as the market has picked up again, we have our COVID-19 pandemic, which has totally make the market go out of hand. So there has to be stronger economic growth, and more higher earnings has to be done for the corporates. Then only they will be focusing on the investment in the country, and then a better economic environment can restore the investor confidence. That means if you are providing clear short policies, then the environment will be further sustained, and investor will feel more and more confident to invest in your country. And when more and more investment come, then you will be getting, your market will become stable, and automatically your stock market will go up. So the stock market crash shows that there is an interconnectedness between the global investor, domestic policies, economic health. So all these things are interrelated, and they work in all combinations. Okay, so we have to understand these factors, and we have to also check the uncertainties, and then based on that we have to focus on our monetary policy, fiscal policies, and various other policies.